The Internal Revenue Service, or IRS, provides access to the Internal Revenue Code and related regulations on its website. You can directly access the IRS code in PDF format. The IRS regulations, officially known as Title 26 of the Code of Federal Regulations, can be found on legal research websites. For specific regulations pertaining to the current tax year, it's crucial to consult the most recent version. As of April 1, 2023, the 26 Code of Federal Regulations Parts 1 through 300 represent the updated regulations. The 2022 regulations, also in 26 Code of Federal Regulations Parts 1 through 300, are available for historical reference. Westlaw offers a resource for researching the Internal Revenue Code and regulations. LexisNexis provides access to the Internal Revenue Code, specifically 26 United States Code. CCHI Know offers a platform for federal tax research, including access to the Internal Revenue Code and regulations. Tax regulations are subject to frequent changes. Always consult the most current version of the regulations for accurate information. The IRS website itself is a primary source for accessing the Internal Revenue Code, which is the foundation of federal tax law. This code is structured into various sections, each addressing specific areas of taxation such as income tax, estate tax, and excise tax. The IRS publishes the code and updates it as needed to reflect changes in tax law enacted by Congress. In addition to the Internal Revenue Code, the IRS also publishes regulations that interpret and explain the code's provisions. These regulations provide detailed guidance on how the IRS applies the law in specific situations. They are essential for taxpayers and tax professionals who need to understand the IRS interpretation of the code. The Code of Federal Regulations, or CFR, is a codification of the general and permanent rules and regulations published in the Federal Register by the departments and agencies of the federal government. Title 26 of the CFR contains the IRS regulations covering a wide range of tax topics. The CFR is updated annually, and it is important to consult the latest version to ensure that you are using the most current regulations. The Electronic Code of Federal Regulations, or ECFR, is a continuously updated online version of the CFR. It is a valuable resource for finding and researching federal regulations. The ECFR is updated daily, so it provides the most current version of the regulations. Legal research services like Westlaw and LexisNexis offer comprehensive access to federal tax law, including the Internal Revenue Code, IRS regulations, and court cases. These services provide powerful search tools and analytical resources that can help you find the information you need. Westlaw and LexisNexis are subscription-based services that are commonly used by lawyers, accountants, and other tax professionals. CCHI Know is another online research platform that provides access to federal tax law. It offers a range of resources, including the Internal Revenue Code, IRS regulations, tax treaties, and court decisions. CCHI Know is designed to be user-friendly and provides tools for analyzing and interpreting tax law. When researching tax law, it is important to understand the hierarchy of authority. The Internal Revenue Code is the primary source of tax law, followed by IRS regulations, court decisions, and IRS guidance. IRS guidance includes publications, notices, and private letter rulings. These sources provide the IRS interpretation of the law and can be helpful in understanding how the IRS applies the law in specific situations. It's also critical to be aware of proposed regulations. Before regulations become final, the IRS often publishes proposed regulations for public comment. These proposed regulations can provide insight into the IRS thinking and can help you anticipate future changes in the regulations. You can find proposed regulations in the Federal Register and on the IRS website. Tax law is constantly evolving, so it is important to stay up to date on the latest changes. You can do this by subscribing to tax newsletters, attending tax seminars, and following tax news on the internet. Tax professionals also have a responsibility to stay current on tax law and to advise their clients accordingly. The Internal Revenue Code is structured systematically. Firstly, it is divided into titles, with each title covering a broad area of law. For example, Title 26 specifically addresses internal revenue, which encompasses all federal tax laws. Secondly, each title is further divided into subtitles, which provide a more granular categorization of the law within that title. Thirdly, subtitles are broken down into chapters, narrowing the scope even further to specific areas of taxation. Fourthly, chapters are then segmented into subchapters, offering even more detailed categorization. Fifthly, within subchapters, the code is organized into parts, focusing on particular aspects of the tax law. Finally, parts are divided into sections, which represent the most specific and detailed provisions of the law. Each section contains the actual rules and regulations that taxpayers and the IRS must follow. For example, Section 1 covers tax rates applicable to individuals, while Section 162 addresses deductions for business expenses. The IRS regulations, which interpret and explain the Internal Revenue Code, follow a similar organizational structure. Regulations are identified by a prefix that indicates the section of the Internal Revenue Code they interpret. For example, Regulation 1.162-1 interprets Section 162 of the Code. The numbering system used in the regulations provides a clear connection to the corresponding section of the Code. Regulations are further divided into paragraphs and subparagraphs, allowing for a detailed and organized presentation of the rules. The process of researching tax law often involves navigating through this complex structure to find the specific provision or regulation that applies to a particular situation. Understanding the organizational framework of the Internal Revenue Code and the IRS regulations is essential for effective tax research. Remember that the IRS website offers a wealth of information for taxpayers, including publications, forms, and frequently asked questions. The IRS also provides resources for small businesses, such as tax workshops and online learning tools. Taxpayers can contact the IRS by phone, mail, or online to get answers to their tax questions. The IRS also offers free tax preparation services for low-income taxpayers and senior citizens. It is advisable to consult with a qualified tax professional for complex tax matters. Tax professionals can provide personalized advice and guidance based on your individual circumstances. They can also help you navigate the complexities of the tax law and ensure that you are complying with all applicable rules and regulations. When seeking tax advice, it is important to choose a qualified professional who is knowledgeable and experienced in tax law. You can find tax professionals through referrals from friends, family, or colleagues, or through professional organizations such as the American Institute of Certified Public Accountants. Before hiring a tax professional, be sure to check their credentials and references and ask about their fees and services. A good tax professional can help you minimize your tax liability, plan for the future, and avoid tax problems. In addition to the resources mentioned earlier, several other sources of information can be helpful when researching tax law. Tax treatises provide comprehensive analysis of specific areas of tax law. These treatises are often written by leading tax experts and provide in-depth coverage of the relevant code sections, regulations, and court cases. Tax journals publish articles on current tax issues and developments. These articles can provide valuable insights into emerging trends and potential changes in the law. Tax newsletters provide summaries of recent tax developments and alert you to important changes that may affect you or your business. Continuing professional education, or CPE courses, provide opportunities for tax professionals to stay up to date on the latest developments in tax law. These courses can cover a wide range of topics, from basic tax principles to advanced tax planning strategies. When researching tax law, it is important to be aware of the limitations of online resources. While the internet can be a valuable tool for finding information, it is not a substitute for professional advice. Always verify the accuracy of information you find online before relying on it. Be especially cautious of information from unofficial sources or from websites that do not have a reputation for accuracy. Tax law is complex and constantly changing, so it is important to consult with a qualified professional for advice on your specific situation. Remember, ignorance of the law is not an excuse. It is your responsibility to comply with all applicable tax laws and regulations. By taking the time to educate yourself about tax law and to seek professional advice when needed, you can minimize your tax liability, avoid tax problems, and ensure that you are complying with all applicable rules and regulations. Understanding the nuances of tax law requires a grasp of key concepts such as gross income, deductions, credits, and capital gains. Gross income is the total income you receive from all sources, including wages, salaries, tips, interest, dividends, and business profits. Deductions are expenses that you can subtract from your gross income to arrive at your taxable income. Common deductions include those for business expenses, home mortgage interest, state and local taxes, and charitable contributions. Credits are amounts that you can subtract directly from your tax liability. Tax credits are generally more valuable than deductions because they reduce your tax bill dollar for dollar. Common tax credits include the child tax credit, the earned income tax credit, and the credit for child and dependent care expenses. Capital gains are profits you realize from the sale of capital assets such as stocks, bonds, and real estate. Capital gains are taxed at different rates depending on how long you held the asset. Short-term capital gains, which are gains on assets held for 1 year or less, are taxed at your ordinary income tax rate. Long-term capital gains, which are gains on assets held for more than 1 year, are taxed at low rates, generally 0%, 15%, or 20% depending on your income. When filing your tax return, it is important to choose the correct filing status. Your filing status affects your standard deduction, your tax rates, and your eligibility for certain tax credits and deductions. The most common filing statuses are single, married filing jointly, married filing separately, head of household, and qualifying widow or widower. The IRS provides detailed guidance on how to determine your correct filing status. It is also important to keep accurate records of your income and expenses. Good record keeping can help you prepare your tax return accurately and can also help you defend your return in the event of an audit. The IRS recommends that you keep your tax records for at least 3 years from the date you filed your return or 2 years from the date you paid the tax, whichever is later. In some cases, you may need to keep your records for longer, such as if you are claiming a loss or if you are involved in a dispute with the IRS. If you are self-employed, it is especially important to keep accurate records of your income and expenses. Self-employed individuals are responsible for paying both income tax and self-employment tax, which includes Social Security and Medicare taxes. The IRS provides detailed guidance on how to calculate and pay self-employment tax. Self-employed individuals can also deduct certain business expenses, which can help to reduce their taxable income. Common business expenses include those for advertising, insurance, rent, utilities, and supplies. When claiming business expenses, it is important to keep accurate records and to be able to substantiate your expenses if you are audited. The IRS has strict rules about what expenses can be deducted and how they must be documented. Understanding the tax implications of various financial decisions is also crucial for effective tax planning. For example, the tax treatment of retirement savings can be complex. Contributions to traditional individual retirement accounts, or IRAs, are generally tax deductible, while withdrawals in retirement are taxed as ordinary income. Contributions to Roth IRA are not tax deductible, but withdrawals in retirement are tax-free. The choice between a traditional IRA and a Roth IRA depends on your individual circumstances and your expectations about future tax rates. The tax implications of investing in stocks, bonds, and mutual funds can also be complex. Dividends are generally taxable as ordinary income, while capital gains are taxed at different rates depending on how long you held the asset. Mutual funds can generate both dividends and capital gains, and it is important to understand the tax implications of each. The tax implications of owning real estate can also be significant. Homeowners can deduct mortgage interest, property taxes, and certain other expenses. When selling a home, homeowners may be able to exclude up to $250,000 of gain from their income, or $500,000 if married filing jointly. Tax laws are complex and constantly changing, so it is important to stay up to date on the latest developments. You can do this by subscribing to tax newsletters, attending tax seminars, and following tax news on the internet. Tax professionals also have a responsibility to stay current on tax law and to advise their clients accordingly. In addition to the resources mentioned earlier, several other sources of information can be helpful when researching tax law. Tax treatises provide comprehensive analysis of specific areas of tax law. These treatises are often written by leading tax experts and provide in-depth coverage of the relevant code sections, regulations, and court cases. Tax journals publish articles on current tax issues and developments. These articles can provide valuable insights into emerging trends and potential changes in the law. Tax newsletters provide summaries of recent tax developments and alert you to important changes that may affect you or your business. Continuing professional education, or CPE courses, provide opportunities for tax professionals to stay up to date on the latest developments in tax law. These courses can cover a wide range of topics, from basic tax principles to advanced tax planning strategies.